it looks like once again the golden parabola is winning here, and ever since the bottom of this market, we've always talked about this little buffer zone at the bottom, and I just put an extension on that little buffer zone that we had there. Whereas usually we have little taps, sometimes we have a little overshoot, and that little buffer zone, believe it or not, was perfectly respected in this dump. So, I mean, just once again, the golden parabola is like the golden opportunity. And I don't know what's going on exactly, except to say that this market still wants to go parabolic. Of course, we had the taco trade, right? The taco trade. That's what everyone's calling in finance these days, where just on Friday, Trump comes out with some type of bad news. It shocks the market. Magically, it gets solved by Sunday, Monday, right? Something like this. And of course, everyone's already positioned or taken their profits. And sure enough, the next week, it's just a new set of whatever is going to happen, right? So, we have to look at this from two perspectives. One, is this just a bunch of nonsense that was kind of distracting? And if that's the case, distractions can have consequences. It triggered some stop losses on the stock market. It triggered some stop losses of big institutions like market makers. I think what's that market maker, Wintermute, I think they're called, or something like that. I think they got liquidated. I heard that maybe crypto.com got affected in some way. And of course, there was a lot of shenanigans on Binance as usual. Binance and FTX are probably the industry's biggest manipulators. And with all these big institutions, pushing different directions, trying to take advantage of these things, and then insider whales, taking actions and, flip-flop on the news all the time. It's a wild ride, and accidents are bound to happen. And what happened, of course, is that a market maker got liquidated, which has severe consequences for our industry. Basically, all of their bags ended up getting dumped. And you saw what that looks like in a flash crash. And that happens quite often. So, it's not like this is something that we don't expect to happen in crypto. It's always shocking when it does happen. But when it does happen, it's a flush of liquidity out of the system, which can act as rocket fuel, potentially to the upside if we catch ourselves. Okay. All of the conditions that we had for a big volatility push, where if I scroll out, right, and you can see that we have this gigantic volatility wave compressing. Of course, it didn't even start back there. It started back here, right? So this is a gigantic compression of a volatility wave. This is the size of that volatility wave, okay? Compressed all the way into a tiny corner. And, what should we expect from here? We're going to expect some type of massive breakup or breakdown. And, I've put, my reputation on the line in staking that as long as we're above the golden parabola, my bias is to the upside. And as long as we're just tapping into that golden parabola with a little bit of an overshoot, right? Because we've been watching this thing since the beginning. We've been watching this wick and this wick. That's actually why we had our stop loss underneath that wick, right? Because of the golden parabola right above it. And same thing happened here, right? What's the line in the sand that I gave you, right? During the flash crash, there's not much to say, but, as long as we closed our candles above 113, I'm chill, guys. And, if we closed any daily candles underneath 109, I'm probably going to start, downsizing my bags big time. Okay, that's just been my strategy. I've shared it with you for weeks, guys, and so far it's looking pretty good. Now, on the day of the crash itself, I did tell you that there's something called an OTE, right? It's an OTE. And this is probably what I would have expected to happen no matter what happened in the market, which is that an OTE would be formed after we had this rejection up here. because we had a broadening descending wedge. Okay, and this is something that I posted in the main chat when everyone was panicking. We're talking about it, and I also posted it in the Bitcoin updates. Okay, so everyone had a fair shot at this one. All right, and you still do because we're still in that zone. And this is just an optimal trading entry. What's an optimal trading entry? Here's a broadening wedge, breakout, back test. You know, where's that back testing? The optimal trading entry. Okay, so again, above 113, we're chill because this is an optimal trading entry. And what that means is that as long as we build a little bull flag here, okay, because we need a little consolidation. You don't just get stuff for free in the market, all right? It's not like, oh, there's a crash and then you buy stuff in a crash and you get to be certain that you're going to go back up. No, because there's always the potential for another leg down. And in fact, in probably about 90% of crashes, we have another leg down. And in fact, even in this crash, I think if we go to the 4 hour, because we were pretty early here, right, on this crash. Let's go to the 1 hour here. Actually, I think, you know, it was crashing right about here. We started live streaming. We crashed all the way down here. And then we bounced back up. And I told everyone, watch out, because there's usually going to be another drive down, and you don't know if that drive down is going to be lower than the wick low or if it's going to be higher than the wick low. And you have to wait for a bottoming structure. So you have to give it, you know, you have to give it like a couple days to just form some structure. And I told you, if as long as it forms a bullish structure, you know, which we started to do as of basically, you know, maybe, you know, last night, right? Like it's not even, you know, it's not even been 2 days, guys, right? Like it's, so, you know, this is a shoulder, a head, a shoulder. We got a inverted head and shoulders here, which is a bullish accumulation pattern. This suggested that they probably would like to start rounding the bottom of this momentum. And then, of course, what sealed the deal is that Trump came out and he said, you know, just kidding, guys. You know, like I was just kidding about China. Like we're really friends. Don't worry about it, right? And so, you know, of course, we had our first drive down, and then we had our second drive down. And after the second drive down on any flash crash, and again, we said this during the crash itself, that there'd be a second drive down, you'd be watching for where the momentum slows. And if the momentum slows under this wick, you have no choice but to be bearish. Even if it's slowing like that, it could be a bearish backtest on the breakdown of that golden parabola. Okay? And that could lead you to a bearish backtest under this undercarriage, where support becomes resistance. And you can go ahead and break down like this. Take a win. You're gonna have to DM me for that stuff. It's unfair to people who pay in order to just like give away stuff. But as one of my former students, you can go ahead and just DM me and see what we can set you up with. All right. Yeah, but if anyone just asks for something for free, just remember there's a lot of people who do pay, and I really have to respect the support that they give to this group. Okay, and I know a lot of them watch the stuff in the recordings, and that's something for them. You know, but yeah, you've been a long time supporter, and we'll work something out. Okay, let's go ahead and just take a look at what did happen. However, which is that we did catch ourselves on the golden parabola. And we did make that bullish structure above our wick. Now, guys, we're talking about 1 hour structure, okay? We're not talking about like a daily structure. You know, we're barely even talking about 4 hour structure. It's just, you know, this structure just barely confirmed as a 4 hour. Let's go ahead and put it on the 4 hour chart. I mean, look at this. Like that's what you're talking about on the 4 hour. You know, this is basically an Adam and Eve structure right here. And so you could say, yeah, this is the expected measured move. Okay. So even on the 4 hour, right? Like this is the biggest move that we could actually expect out of this bottoming pattern. So again, like you have to know what time frame you are as a trader, right? A guy like Arthur, who's, you know, constantly leveraging, and he's constantly on the 5 minute and the 1 minute, right? And, you know, when he's talking in the main chat, you know, he could be making all sorts of money off of these little bounces on the 5-minute because that's his time frame, right? If you're a 1-hour trader, you know, of course you might see that inverted head and shoulders. If you're a 4-hour trader, you might see this Adam and Eve, assuming that you know your patterns, right? You're seeing a slowing in momentum. You're seeing a double bottom at the very least, right? You could take a chance above that golden parabola. But here on the daily, what do we have? All we have is a bounce. Okay, we just have a reaction. We have a mean reversion, which is filling in a fair value gap, which hasn't even overcome the neutral point and which has put zero structure, zero bullish structure whatsoever. Okay, but what I'll tell you is that if you're a day trader and a swing trader, right, we're at least on the right path. And so if we do have a daily close above that 113, remember, that's why I gave you that 113, because I'm expecting that most people in this group are trading on the daily or above, because a heck of a lot of us are DCAers, a heck of a lot of us are swing traders, right? So we're probably even going to wait for, you know, some type of weekly structure. Well, guess what? The weekly also closes in about 2.5 hours. So, you know, we're right on our time frame. Okay, you guys don't have to feel bad about missing out. All right, so let's go ahead and go to the weekly here. And, you know, this candle is still very heavy on the weekly. You can see that we've retraced more than 50% of the previous candle. So as, you know, as a swing trader on the weekly, you know, we have to be aware that just because we're getting bounce up right here doesn't necessarily mean that we're out of danger. I'm going to go ahead and just assume that this is the wick low on this weekly candle. And let's just see, did we recover 50% of it or not yet? And you can see 50% is 116,709. So, you know, as a swing trader, if you want your cue that, okay, the weekly is looking back in, like it's back in shape. Well, first of all, we had a test of the 21 EMA here on the weekly, which is a good sign because we often get pretty big bounces off the 21 weekly EMA, assuming that we can hold it, right? Assuming that we can hold it. But the problem is that we also sometimes wick through the 21 EMA, bounce back up, and then look what happens. We flush back down. And like I was telling people in the live stream during the crash itself, and what I was asking Reddit to check out was the 50 EMA on the weekly. Like you know, a lot of people talk about the 9 and the 21, you know, which is fine. But guys, we have to contend with the fact that the 50 EMA is actually the king on the week. Okay, I want to go back in time here. And here's the 50 EMA lifting us off. Now, you can see that that like corresponds with all the EMAs bunching up together. So it's very easy to misunderstand this as the 9 or the 10. Okay, as the 9 or the 20. Okay, something like this. Then this one right here, you can see that, yeah, we did squeeze through the, you know, the 9 and the 21 EMA. But where did we actually base off of? We actually based off the 50 EMA. Okay, so, you know, it was muddled back here, right? I mean, this was also a 50 squeeze, right? You see this blue EMA right here? This was also a 50 squeeze. So we don't know, you know, which squeeze is this? Which squeeze is this? But what we found is that it's actually the 50 being respected, the 50 being respected, the 50 being respected. Once again, the 50 being respected, okay? And this one kind of sealed the deal for me. The 50 is the king on the week, all right? And so, you know, if we are kind of putting in one of these little toppy patterns, and if this wick was just shenanigans, sort of like this bounce down, this breakdown right here, or this breakdown right here, we still have a danger that this wick can be bought back up, okay? Here was a wick that got bought back up, and then it flopped over. Here was a wick that got bought back up, and then it flopped over, okay? Even here was a wick that got bought back up and then flopped over. So 100%, if you are a swing trader, you're not necessarily out of danger yet. And that's why you have to know what type of a, you know, what type of a trader you are, what time frame are you operating on for your bags. And if you were just looking for some type of short-term advantage in that crash and trying to get a bounce, Well, awesome. The 21 EMA here is your friend, right? Like you got a little bounce off that 21 EMA. And if we sit above this 9 EMA here on the weekly, it's going to look even better, okay? But the problem is that the macro is operating off of that 50 EMA, and there still is the risk that we can come down to retest that